Anything for the sports channel, Gary.
Alrighty, well, unfortunately, we have another small red day recap. It's about the same loss type of day as Friday, so kept it a little small, but would have liked to have it a little bit better. So our first trade of the day was Bynd. SPY was gapping down huge, but Bynd was actually gapping up on some really good news that they're boosting their retail distribution and they're adding the breakfast sausage patties. So Bynd and their quirky little products being released. So in the morning we were looking for an entry, and I was trying to catch like a twitch. So I eventually went long. I was bidding up, and eventually this wick filled me right at about 146.16, and we were sitting good on the position. We were up about $30-$40, and this breakout, this was a nice bull flag, so we had the move up. And then this is the sideways consolidation. And this is exactly what a false breakout looks like. So we broke the 147.33, the top of the consolidation range. And I was looking for an extension at least up to 149, potentially 150, maybe as high as this pre-market, 148.64. But we just never got that. And we eventually sold off. And my stop was a 5-minute close below 145. And we were really selling off. I wanted to give it enough room to do a retracement that is healthy, and then that could bounce up, but we just didn't get that. And on this candle, I was trying to get out. I placed my order. We stopped. We broke the low of the day, and that's when the volume started really coming in. And I was trying to get out, and I just couldn't get out. And eventually, it just really wicked down. I mean, this 1-minute candle was minus 2% in 1 minute, and on an option, you're done for. And so that's a really unfortunate stop out. We stopped out, and we got filled right at the low of the day, because that was the only time where it pushed up to give me the liquidity to get out. So Bynd, super unfortunate, fat red morning trade of minus $202. And of course, I could have held all the way, and actually I'd be at break even right now. At this point, I'd be up, $40 again, but shoulda, coulda, woulda. You don't know if the sell-off is going to get worse. Obviously, yes, 140 should be support, but that's in hindsight. And the reason I had to tag out was because the SPY was selling off like crazy. So our next trade of the day was on SPY. SPY, we had the nice push down. That's probably what dragged down Beyond Meat. And then we hit my support right here to the penny almost at 323.77. Probably should have went long there for a nice move up to 325.50, but we missed that. And so we rolled down, and then we bounced again off that support. But once we made this lower high pivot right here, that's when it was on my radar to get short. So we went ahead and got short on SPY, just 2 contracts. And we went with the 316 put, and we sold off. And then we twitched up, and I was like, oh no, are we going to reclaim support? And I unfortunately got tagged out right about here at about 323.50 on one of my contracts for plus $10. But luckily, we still had the second contract. So SPY really rolled over. We put in a bear flag, but the bear flag broke down, and then it had no follow through. So right here on this hammer candle, I just took my profits on the second contract for plus $30. So small little win on SPY, kind of helps the sell off just a little bit. Okay, and then our next trade of the day was Roku, and we were saying to go long on Roku over 165. 165. That's all the way down here. And I am a weenie and a sucker. I missed this completely. The first candle of the day was red. Then we ripped up and it went green. And I was trying to get filled. I had my order sitting at 166.77. Couldn't get it. After we got a huge move up to 169.80, I was like, okay, we're at resistance. It's probably over. I took Roku off my radar. But look at this slant. You could have bought again over 170. Could have targeted any of these resistance levels at 174. Roku just kept on going. And over here, I finally got an entry, another bull flag slant right here. So right here, we went ahead and went long on Roku. And I knew that we were extended at this point, especially with the SPY selling off. So you got to be able to take your profits quickly because there could be a false breakout just like Bynd. However, we didn't false breakout. We got long at about 177.20. Had a nice push up. We were up about $120. I had my order sitting there, but I was just half a second too late on getting filled. And eventually, Roku, the bid started dropping, and I didn't want to go to break even. I wanted to take some profit just to lessen the blow of the day. And so we took a $70 profit right there at about 179 on Roku. And so that was a nice revenue trade of about $70. So that was Roku. Those are the main day trades of the day. Roku eventually was still pushing up. We did grab some shares in this area, and we did grab some long-term debit spreads if we want to take a look at the Robinhood portfolio. So on Roku, we grabbed the long-term debit spreads. That's 145/250. 245/250 calls, and those expire January 2021. So we'll let this mature a little bit. I'll probably be taking profits a little bit early, maybe about 200. Maybe we'll get a good $50 profit out of that. So Roku looking good long term. Our next trade of the day was Apple, and Apple we just did a ghetto spread because I didn't want to use up some day trades. So we were able to get almost a free debit spread. Right under here, we put this little 1-minute bear flag in after breaking support of the 106.50. That represents the gap from last week. We went short on Apple just underneath 105.50. Got a nice pull down. Then we started to push up, and I was like, I don't know if I want to fight Apple. So I just sold the second strike below at about 105.25. So that's kind of like locking in profits halfway. I'm still holding it as a synthetic short position to kind of hedge my portfolio. But look, the 101.25 put, we're down on that, but we're up on the 100 put. So we're still making profit even though Apple's above our entry. So that's kind of like a synthetic short. And we did the same thing with Boeing. So Boeing, we said to go short underneath 160. Boeing gapped underneath 160, and we just started to really roll over. And I went ahead and went short just underneath 156, and we just got 150/149 put spread. We are still even short full share. So that's a little bit dangerous being short the share, but it's just one share. Basically, the reason it's dangerous is because losses can technically be unlimited. Let's say Boeing gaps up to 300. Boom, I got to take a $200 loss. And if Boeing goes to zero, the most I can make is $154. So that's Boeing. So long term, we're riding Roku and Bynd. So we've got those long term debit spreads. And Bynd is actually showing a really good pattern right here, BYND. So Roku, all-time high breakout favorite pattern, probably good to go. Bynd is still going up. I could have held my contract all the way through and I'd still be in it right now. And as you can see, we have some buy stops in to trigger me to get in some shares just above this 147.50 level. So Bynd, this is a nice ascending triangle pattern. These usually break to the upside. And Bynd will definitely get going if SPY can get going. So we've got a November 20th, if we can find it on the list right here. November 20th, 170/175 call spread. So keep an eye out for the SPY. I am targeting about 318 on the SPY. Not a crash yet. Not a crash on SPY yet. This is nothing but a buying opportunity in the long run. Looks like this was a bear flag and not a bull wedge pattern. So this is a bear flag that is playing to the downside. So measured targets, 318, and maybe we'll go as low as 315. But after that, we'll be looking for more long trades. Alrighty, thanks for tuning in. See ya.